A new trading week is underway, and we're seeing global stock markets post a strong advance. We're also seeing concerns regarding the Eurozone as well as Britain. Joining me this afternoon is Tim Anderson of TJM Investments. He's the managing director. Good afternoon, Tim. Thank you so much for joining me.
Sure, it's great to be with you.
Well, when we look at the big board, we're seeing broad-based gains in U.S. equities. We're seeing all sectors higher today. But overseas, there are concerns about a Brexit. And we did see weak flash PMI manufacturing figures. So how are you digesting all of this?
Well, I really think that the key trigger point for the extending the rally that we had last week is really the rally in oil and the other commodities that had taken such a hard hit for the last year and a half. The mining stocks and some of the material stocks and mineral stocks are up. That's causing some of the emerging market currencies to be doing better. Some of the emerging market ETFs are doing better, and that's really got most of Europe up 2 to 2.5%, and it's really extending the rally in our market significantly today. The big debate is going to be how much of this is short covering and how much of it might be real buying.
I want to ask about fundamentals as well as the week ahead. We have Federal Reserve speakers plenty this week, and we have key economic data out from the U.S. So considering what we have this week and in consideration of negative interest rates from some global central banks, what's your take?
Look, the Fed did a great job, I thought, 2 weeks ago of tapping down the possibility of us going to negative interest rates like a good chunk of Europe has and like Japan just did a few weeks ago, because I think that would be very negative. I think that's one of the big problems for the banks in Europe. And negative interest rates is just a killer for big financial institutions. So I would certainly expect that the Fed speakers that come out are going to say, look, there are some positive signals in the economy. It's not where we want it yet, but we got a positive CPI and PPI at the end of last week. We were still encouraged that we're going to get to that 2% inflation target, and there's still a possibility we'll have more hikes this year, but we're going to be data dependent.
Thank you, Tim, so much for weighing in on all these factors at the beginning of the week.